All right, let's jump right in. Imagine you're a small business owner and you've got this big new regulation on your calendar for, say, October. You're getting ready for it, then bam, out of nowhere, the government says, scratch that, the deadline is now less than a month away. Well, that's exactly what just happened to hundreds of Canadian businesses with new anti-money laundering, or AML, rules. We're going to break down what happened, who's on the hook, and here's the twist, how this massive headache might actually be a blessing in disguise.
So let's get this timeline straight, because this is where it gets wild. Businesses were all planning for an October 1st, 2025 deadline. Plenty of time to get your ducks in a row, right? Nope. On March 7th, the Department of Finance drops a bombshell and accelerates the whole thing by 6 months. The new deadline, April 1st, 2025. Yeah, your 6-month runway just shrank to less than 4 weeks. So why the sudden fire drill? This wasn't just some random change. If you look at the official directive, it's pretty clear. The government is scrambling to crack down on some really serious stuff. We're talking drug trafficking, especially fentanyl, and other major international crimes. So this isn't just paperwork. It's part of a much, much bigger fight. Okay, so with that kind of urgency, the big question on everyone's mind is, does this affect me? Am I on the hook for this? Let's get into the specifics of exactly who just got pulled into this new regulatory world. The new rules are laser-focused on 3 specific types of businesses. First, you've got factoring companies, the ones who buy invoices to help with cash flow. Then there are check cashing businesses. And finally, a pretty big category, financing and leasing companies. If your business fits into any of these, you are now officially on the radar of FinTrack. That's Canada's big financial intelligence unit, the one that hunts for money laundering. And to give you an idea of the scope here, the government thinks there are about 65 factoring companies, 200 financing and leasing outfits, and a whopping 600 check cashing businesses that are now covered by these rules. Now, those numbers might not sound huge on their own, but for these specific industries, this is a seismic shift.
But wait, it gets bigger. If you zoom out, this is just one piece of the puzzle. Related rules are hitting over 272,000 businesses involved in importing and exporting. The takeaway here is that Canada is doing a massive overhaul of its entire system for fighting money laundering and terrorist financing. This is a big deal. Now, there is a little bit of a silver lining. The government isn't totally heartless. They know this was a shock, so they've set up a 1-year transition period. Basically, until April 1st, 2026, they're going to focus on helping businesses understand the rules, not slapping them with fines. But let's be super clear. This is not a free pass. It's a grace period. The clock is definitely ticking. Okay, so you're one of these businesses. The deadline got moved up. You're probably thinking, what do I actually have to do? Well, let's dive into the nuts and bolts of what this new compliance really looks like day to day. For factoring and check cashing places, it really comes down to 3 big things. 1, know your client, or KYC. You got to verify who you're dealing with. 2, record keeping. Any transaction over $3,000, you need a paper trail. 3, reporting. You have to report any big cash or crypto deals over $10,000. And this is the big one. You have to report any activity that just feels off or suspicious, no matter the amount. Now, for financing and leasing companies, the definition is a bit more dialed in. These rules are for you if you're financing or leasing stuff for business use, cars, or any other property that's worth more than $100,000. They've made a point to exclude lower risk stuff, like rent-to-own furniture. They're focused on the big ticket items where money can be hidden. And the requirements for them? Well, it's pretty much the same playbook. You got to do that know your client check on everyone, keep meticulous records of all your deals, and you guessed it, report large cash and virtual currency transactions over $10,000. Plus, anything that looks suspicious. You're seeing the pattern here. Track, verify, and report. All right, I know what you're thinking. This sounds like an absolute mountain of paperwork, right? Like you suddenly have to build a whole new compliance department you never asked for. But what if I told you there's an aha moment hidden in all this? What if this chore could actually help you solve one of the biggest challenges every business faces, getting a loan? Just look at this. On the left, you've got the new AML rules. Verify ID, record transactions, report sketchy stuff. On the right, that's what pretty much every lender on the planet asks for: your business registration, bank statements, financial statements. Are you seeing the pattern? It's all about the same thing, proving your business is legitimate and that you know how to manage your money. They're 2 sides of the same coin. And hey, this isn't just a theory. Take a look. On one side, we've got the checklist from a huge bank, CIBC. On the other, the requirements from a private lender, Kingsman Capital. What are they both asking for? Financial statements, bank records, incorporation documents. It doesn't matter if it's a big bank or a small private firm, they all want proof that your financial house is in order.
Let's get inside a lender's head for a minute. They're not trying to give you a hard time. They're just trying to figure out their risk. Can you actually pay back the loan? Is your cash flow healthy? Are you profitable? All that paperwork, whether it's for the government or for a bank, is designed to answer one simple question. Do you run a tight ship?
Okay, so let's reframe this. This isn't just about compliance. It's about getting your business funder ready. So how do you actually do it without losing your mind? Well, let's walk through a simple, practical, 5-step roadmap to get you there.
All right, here's the plan. Step 1, appoint a compliance officer. This doesn't have to be a new hire. Just make someone on your team the point person. Step 2, write down your rules. Create a simple policy manual. Step 3, train your team. Everyone needs to know what to look for. Step 4, this is not a set it and forget it thing. You've got to review and update your plan regularly. And finally, step 5, don't be afraid to ask for help. You can outsource the really complicated stuff, like monitoring transactions, to pros who do this all day. So let's tie this all together. The systems you have to build for these new AML rules, the clean records, the organized financials, they're the exact same systems that make a lender look at your business and say, yes, I want to invest in them. Suddenly, this regulatory chore becomes a powerful tool that gets you ready not just for compliance, but for serious growth. And that really leaves us with one last question to chew on. As you start tackling all these new rules, don't just ask yourself if you're checking all the boxes. Ask yourself if the work you're putting in is making your business not just compliant, but fundamentally more fundable. Because in this new world, those two things might just be one and the same.